Welcome everyone. Stock market technical analysis. What I'm going to do is get right into the charts. On this channel, we cover charts, trade ideas, technical analysis. All the trade ideas that I really point out are all based off the charts. Nothing's based off of, the Fed printing money or some company doing something. It's all basically based on the premise that all that information is priced into the charts. The market knows the Fed's printing money. The market knows that, that certain things are going on with the stimulus and all that. That's why the charts are priced how they're priced. So that we're going to look at the charts and try to anticipate what happens next, given the information that we have today. Start off here with the SPY. What we got going on the SPY, if I go to the daily chart, we have from the March 2020 lows, we have this trend line. We were walking up and we tagged it once. And recently we just broke down. So we had a sell signal right here, and you can see what they're doing is they ramped it all the way up, and they're back testing that broken trend line. As of right now, they've made it look like they're going to recover this trend line. Keep an eye on today's price action, especially into the close, to see if this starts to roll over. But here's the hourly chart. You can see we're just kind of dancing around this trend line. So we need a little more information, but I am looking for a rejection or a sell-off. If for some reason we get some sort of a ramp, we've got this blue trend, major resistance just overhead right up here. Right now it's sitting at about, if I can get the thing out of the way, they put this little USD label in the way, and it just makes it almost impossible for me to see these charts when I need to look at it. Here it is. Right there, it's about 390.51, we'll call it. So if we get the ramp and we run up to 390.50, then that's major resistance. That's going to come really back from the descent, or from, let me go to the weekly chart. That's from your 2009 bear market lows in SPY. So there's the low in 2009. You can see we just held that all through here, broke, back tested, broke, back tested. So that's where we're at right now. So major resistance, we're just right in the area. So I expect, I'm expecting some sellers to come in here, but again, they might want to play some games, pop it up, ramp it higher, make it look like everything's great and rosy. That happens a lot of the time when you're right around a key level. You'll see some whipsaws and tricks and fake outs as the market makers start running games at those levels. So watch for that and kind of watch that on the hourly chart. The one thing is Qs has not broke down yet. So we don't have a sell signal on the Qs. We obviously had a sell signal just previously, but that was a whipsaw signal. It was a bear trap basically. And usually when you see these bear traps, then they're followed by a quick ramp up. And that's what we've seen so far. They gapped it up and have ramped it all the way to the top. So that is very common when you get a bear trap to see the ramp up. And so there's no sell signal on the Qs until we get another breakdown of this trend line. And this is coming off the March 2020 lows. You can see on the hourly chart, we've had several reactions along there. We broke, and now we're just up near the top. Let's look at the daily chart. You can see we're just kind of wedging within the peak of this wedge right up here. So Qs has a little bit of a different posture. And again, this top line right up here doesn't necessarily have to be the resistance. We could continue to ramp higher. We only have a couple reactions, so I just marked it out, but it's not anything that I'm looking for to trade against. At this point, I'm looking for a sell signal of a break of this green line right here, this lower trend line. Until we get the breakdown, I'm not looking to step in short on this thing up here at at this area right up here. It might not be a trend line that's valid. So down here below is a lot more, a lot safer. And in this market that is extremely resilient, it's very, it's extremely bullish. You want to wait for confirmation. You want to wait for a solid sell signal. Again, I think it's going to come. A market that is extremely bullish is often the point in time when something reverses. And again, when something's extremely bearish, that's usually the time when it's time to step in and start buying. And when something's extremely bullish, then that's usually the time to step in and start selling. So that is, that's contrarian, but that is typically how the market works. But it doesn't mean we can't continue this kind of grinding trend higher for a little longer. We do have negative divergence, and I pointed those out in many videos, but there's your negative divergence on the daily chart. That remains, so it just continues to build. And these can build for a while. If I go back and give you an example, let me show you the SPY and how these can continue to build. So you'll see here's an example. This is negative divergence right there on the daily chart. It continued to build and build for, for a little while. We basically had it for about a month and a half or so. And it just continued to build and go. And then finally it played out. And when it plays out, you get these huge moves. So I suspect when this plays out, the downside, I suspect we're going to wipe out a lot of these gains right through here. I think we'll roll down to, 321 or something like that. And I suspect we'll wipe out a lot of those gains. But again, we have to wait for it to start to trigger. So watch the SPY, watch to see how that plays out today, and watch the Qs. Small caps here, you can see same deal. We have this trend line on the daily chart, this price channel. We had a false breakdown during the holidays. This is a better breakdown, and we're running up for a back test. So as you roll in, you can see as of today, as of right now, they've recovered that, but it's very muted. And if I go to the hourly, you can see they're just kind of dancing around. I suspect it starts to roll over and fail, and they make it look like it's good and going to recover. But I'm looking for that breakdown. But I wouldn't want to step in and take a position until I see it. So I'm just waiting for that. On the daily, negative divergence remains. So if we turn down now, this RSI is going to turn down and continue to confirm the divergence. And you can see we made a slightly new all-time high. So we're at a divergent high at this point in time where the price is slightly higher than the previous high, and yet the momentum is still lower than the previous kind of the previous highs. So again, divergent highs often fail, and I think this one will as well. Something to watch here on the 10-year Treasury interest rates. If interest rates start spiking on the 10-year and we break, I think if we're kind of at the area where if we go much higher from where we're at now, we're going to start to see pressure on the market. This is the trend line on the daily that I got on TNX. It tracks the 10-year interest rates, and you can see we've just been kind of trending downward. Nice, lots of reactions. We broke down, and we've since rallied right back up to that trend line. So if we get an impulsive break higher here, that could cause problems. The market can't take higher interest rates, and that's why the Fed's doing their stimulus. They're trying to keep interest rates down. Clearly, what they're trying to do is steepen the yield curve to help banks so that banks are motivated to lend. And that's obviously what they're trying to do. But does that mean that people are going to be borrowing? That's what whether a bank's motivated to lend or not doesn't mean that they're going to borrow. And if interest rates are higher because you have a steeper yield curve where the Fed's borrowing on the short end of the curve or the banks are borrowing on the short end of the curve from the Fed and lending on the long end of the curve to the public for business loans and mortgages and car loans and all that stuff. Those interest rates to the public have to be higher in order to, for the banks to make that money. So are people going to be borrowing, I guess? Whether the banks can earn money doesn't mean people will borrow. So watch that. These interest rates are important to note. And TNX is right there at resistance. So we'll see what plays out on that one. Okay, gold's kind of doing what I thought it was going to do. And so I'm looking for one more move down in gold. Doesn't mean we're going to get it, but we hit major support yesterday. 1790, right around this level, is major support. And that goes all the way back from the last bull market in 2013, 2011. You can see we tagged that 3 times, putting that level clearly in place. as resistance. And recently, as I move in, we clearly broke above that resistance. And when we broke, it was impulsive. So that's a breakout. That's a confirmed breakout. Everything looks good. And what we've done over the last few months is come back in for a back test. And at the point, I've talked about a back test for many, many months during all this price action. And we did get it. Here's your first back test right there at 1790. Little bounce off of that. So what I'm looking for now, let me go back to the daily here, is I'm looking for bullish divergence to start to show up. And we don't have it yet. So I want to point out the scenario of how it might show up. Yesterday we came down, hit major support, but we don't have bullish divergence. We just have, you can see here, we had a higher high or a higher low, I guess, in the RSI and a higher low in the PPO. But we also had a higher price. Let me mark this one out here. We also had a higher price. So I'm looking for a slightly lower price while putting in a higher low. So in order to get that with how this is set up, we need this to move a little bit higher. This RSI starts to turn up a little bit. Then we get that final move down, put in the new lower low below this 76 area, 1750, somewhere right in there. Put in that new lower low in price, and yet the RSI will not make a new lower low. It'll look something like this at the point in time. So that would give us bullish divergence, provided that we start to turn up at that point. So I'm looking for that to show up. When that starts to show up, it's going to start to build a pretty, it's going to start looking pretty bullish for gold. The dollar here, you can see here on the daily, just coming back in for a test of that broken resistance right there at 90.96. Looks like we'll probably hold there. I suspect we hold there. And, probably continue higher. So I'm looking for the dollar, looking for at least another move higher in the dollar. This could get, who knows how high this could go, but at least another trend kind of thrust higher. And I don't see any reason why the dollar is just going to turn down here. I see, we've broken that recent resistance here. So I think we're going up to 92. That's the level. To me, that's the key level. We start to break above that, there should be some problems. And, the trend, the momentum is up. You can see how we're trending higher. I don't see any negative divergence in the daily. Let's look at the hourly here. And yeah, we do have slight negative divergence. And that's, here it is on the hourly. There's your negative divergence as the momentum started to fade and the dollar continued higher. So there's the pullback. That's the reaction that we're getting, but that's just an hourly reaction. So unless I see something show up on the daily, I think we're likely to hold support in this area and continue higher. Maybe not today, of course, but over the next days to weeks. Financials kind of just chopping around above support. Support right now is this upward trend line, and that's where we held so far. So financials in general still look kind of bullish from price, but if you look at momentum on the daily, we've got negative divergence right there. So this was your negative divergence. Yes, it did play out for a drop. We did get a pullback of about 8%. I don't know if that's enough to satisfy this. I think we're likely to, we could run up and make a new marginal high, kind of pop above that. I think that's pretty likely at this point. We run up and make a new high. And just put in another divergent high, and then we turn down. So I don't see anything extremely bullish right now in financials, except for the fact that, we're just kind of prices moving higher and we're just kind of hanging out. But the technicals don't, the momentum indicators don't indicate to me that we're going to go much higher beyond maybe this 31, we'll call it 31, 32, somewhere right in there. I don't expect to go too much higher beyond that. I want to point out corn. Corn is starting to build negative divergence. You can see here on the daily chart, we've got negative divergence right there on the PPO and the RSI. And we did make it's actually slightly higher. You can see just right up there, we made a slightly higher high in price with negative divergence. So this to me signals that corn's likely going to, I think corn could easily come down. If I roll out, We've got a longer term trend line here on corn coming back to 2014. We tagged it right here back in 2019, and then had a reaction right in here. So this trend line right here, I think, is pretty valid. And if corn sets up for a move down, I think we can come back down and back test this trend line. That would be a buying opportunity down there. That's likely where I'd be looking to recycle back into corn. Energy, energy is kind of hanging out. It's above resistance right now, which I had about 42. That's kind of the previous high. So we're going to have to see what's going on here. Are we uptrending and going to continue to uptrend? There's kind of, you can see we're clearly making kind of higher highs and higher lows. We do have negative divergence. So at this point, we could run up and make a new high, a new marginal high above this previous high right here at about 45. Run up, maybe we tag, run up there to maybe 40, 48 or so, or no, it's about 46.50. Hit that and make a new high, but it would be a divergent high if it happens anytime soon. So look for that. That's possible. At this point, we're really right in the middle. So I'm kind of undecided on this one at this point, and I'm just waiting to see how this plays out. It's really in the middle of a zone where I can't make a decision which way it goes. I guess if I had to guess right now from the look of the charts, I would say we run up and make that new high. Zillow Group. All right, so as of right now, they've recovered the broken trend line. Here's your hourly chart, and this is the upward trend line right here. You can see we had a sell signal. There's a breakdown, and we've come all the way back up, and today they gapped it up and ramped it higher, recovering that, but the day's not over. And I suspect this is the top of, this is kind of the top or the back test. It's very often, when everyone sees a trend line, they're going to try to overshoot it or undercut it, and sure enough, ramp it up. But then if you end up closing the day lower, or say next week we just gap down back below this trend line, that would signal to me that this was just a back test, and it's going to roll over, going much lower at this point. So I'm watching that to see how that one plays out. If I look at the daily here, negative divergence, and this is a divergent high. So let me kind of extend that. Let me just get rid of that one. I'll just show you just recently. There's kind of the divergent high. You can see lower momentum and yet new marginal higher price. Divergent high. Usually when you see a higher price, you want to see, if it's extremely bullish, you want to see higher momentum. You want to see momentum building on a stock as prices continue to build. This is prices moving higher on less momentum. So momentum is waning. That's what these indicators show you, is what's momentum doing. Now, when you have a thinly traded market and you've got some buyers and the sellers just aren't showing up quite yet, you can move higher, but it doesn't mean that it's more and more enthusiasm, more momentum actually playing out. So I suspect this one fails right in this area and rolls over. Tesla's just sideways, nothing to really report here. We don't have anything really going on, so we'll just need some more data on this one. This is one pins that I spotted last night. I noticed they came out with earnings last night or after the bell, and it was ramping up about 10%. So I pulled up the chart, and this is what I had. This is what I could see in the chart. So marked up, here's your March 2020 lows, and here is the ramp where it's just continued to uptrend. We recently broke right here, and we've been back testing. And after the bell, it looked like it was gapping up or going to gap up right into major resistance. Didn't quite get there. My trend line could be off just slightly, but it was close enough where, gapping up 10% right at resistance. I was interested in taking a short. I did take that short this morning. And the way I played that is, as it opened up, I kind of watched it, saw it started to pull down, took the short, and then as it fell down and started to get close to this gap right here, I covered half the position, and now I have a half a position that I'm looking to actually hold for a swing trade. So looking at the daily here, we got rejected at resistance. We do have negative divergence. This was a divergent high that it made on earnings. It opened up almost 10% higher. Now it's only up 3%. So that's a 7% gain so far. And I'm looking for this to continue to roll down now after making this divergent high. So trending, I think we're going to roll over. We're below this support line, negative divergence. That's why the seller stepped in today, because we were gapping up into major resistance. So that's clearly a resistance level. Now, yes, we could ramp higher and run up and tag this trend line. That's always possible, but close enough where I think for a swing trader or someone who's looking to hold something as a trend, or within the area where this is where it looks good to me. Now, would I want to short as of right now? Well, it's kind of far away now. If they want to ramp this higher, you'll be down, you'll probably be down 10% or so if they did, 10, 15% if they did another back test. So, but again, if you want to learn how to do these things, that's why I have my trading course, because it's going to teach you the skills that will allow you to find this stock before I can show it in a video. And that's what my course is really all about, is really being able to mark up trends, spot negative divergences, finding the ability to really anticipate trades so that you're not just following all the trades that I point out, and you can find some of these for yourself. So we'll continue to watch this one now. Nike coming in for a back test. So, I'm out of this one. I covered it the other day. I pointed that out in the video. But I am looking to add it back on a back test. So if we get a full back test all the way up here at like 147, 148 or so, depending on when we get there, I don't know if we'll get there today, but if we get that back test, I'm looking to add back that short. Why do I like it? Well, you've got negative divergence here on the daily, clear negative divergence, an uptrend line that was broken. We back tested, we rolled over. Now we're coming back in for another back test. So this market loves to backtest. Let's just put it that way. When you get breaks of trend, because it's been such a buy the dip market for so long, that's where you get the backtest. You break trend, people don't see the trend or they don't care, and they buy the dip no matter what, and you get a backtest. So I'm seeing a lot of broken stocks. When they break their trend, they at least do a backtest or two before they actually fully break. So keep an eye on that. That won't happen. Eventually that won't happen, but for right now, that seems to be the status quo. Etsy here, up 5%, but what did it do today? It made another divergent high. So here's your negative divergence right there on the daily chart. They ramped it up, made a marginal new high with negative divergence. This is a high likelihood of failing this new high. Whether it fails today, I don't know, but we'll have to see. And we've got, we've got broken support all over the place. So this chart's not as clean as some of the other ones that, we've had a trend here. We broke support, back tested, created another uptrend, broke support, back tested. It continues to do this kind of pattern where, so, it could continue to make an uptrend and then break support. I don't exactly know. Higher risk trade on this one, obviously. And all these higher momentum names are going to be higher risk. That's just the nature of the beast. But at the same time, higher reward. So, okay, let's check out Peloton here. I added to the short position today on Peloton. The reason why I like it is yesterday you can see that they just ramped this thing higher into earnings, basically. Earnings were coming out after the bell, and so they just ran it higher. And earnings came out negative for whatever reason, and the thing, basically gapped down, trapping, if you bought yesterday, you're underwater, and gapped down and looks weak as of right now. So what do I like about this? We're kind of holding this support shelf right here at about 144.80 or so. We've had, this is where it gapped higher previously. We're kind of holding this level. You can see they kind of chopped through it a little bit right there. And so I'm looking for that to break, but you can see on the daily, we've got negative divergence. We had negative divergence right here. That's just continued to extend all of this, right here. There was another divergent high right in here. And we're starting to turn down now. You can see from this divergent high, we're now making lower highs. So right there, we can kind of mark out what looks like a downtrend, something like that. So yeah, looking for this level to break and to continue lower. I think once we break, we're probably going to head right down to about 118.62 and then likely get a bounce there. But again, I think we're heading lower on this one. So I added to my short position on this one today. I haven't talked about Carvana for a little while. I am still short Carvana. It's not a huge short. I've taken some profit as this thing has kind of dipped down. But this is the pattern. You've just got this bearish rising wedge pattern right here. And we're just continuing to kind of work our way within that pattern. We had 2 overshoots. And every time we get down to the bottom, the buyers step in. And when we're up near the high of this range, the sellers step in. We are losing momentum, so negative divergence continues to build. So each one of these highs that we've made have been divergent highs, and the momentum is continuing to extend. I'm just looking for this thing to break, for the price to start breaking down. I think we're going to get it, but it's likely going to come when the market breaks. Until then, it just wants to kind of hang in there, work its way within this bearish rising wedge pattern. We're getting closer and closer. It's kind of coiling, coiling up. So we'll wait and see. Qualcomm, this thing's weak. We have, this is a sell signal and it continues to break down. You can see down today another percent or so after being down quite a bit yesterday. So I circled this, pointed this out just the other day in the video. If you took that as a sell signal, then that's a pretty profitable trade. From the breakdown point, this thing has been down almost 12% in just a few days. The real sell signal in this came right here. This was your sell signal in Qualcomm. We did a back test. They recovered it just one day, made it look bullish. The following day, gapped it higher and then sold it down in the first hour, and then went sideways. You can see here on the hourly. Sold it down the first hour, just went sideways, and then the next day gapped down. And now we're just continuing to sell off. We're making lower lows and lower highs. So you can see in a matter of just a couple days, we've pretty much given up all the gains that have been in place for about 86 days or so. If you were long this thing for the last few months, 86 days is quite a long time. That's going all the way back to basically, and yeah, there's some areas if you bought down here at the lows, you're still profitable, but not by much. But yeah, if you bought back in November of last year, you pretty much are close to break even or negative in a matter of just a couple days. And that's how shorting works. Okay. 80% of the time it goes up and and it goes up and up and up, and then when it breaks, gives back all those gains very quickly. And that's what I talked about. 8 out of 10 days, the markets go up, and 2 days they go down. But when they go down, oftentimes you'll wipe out all the gains. This thing's likely going lower. We got a big gap down here. I think that's a clear target. You probably want to, got 2 gaps on this thing. So we've got a gap down here, and we have a gap all the way down here at 94. Those are the 2 targets. I think you're likely to get a reaction on this first gap. The dip buyers are going to be there stepping in. And so that's likely get a reaction or a bounce. And then, we'll look for a break of that and head down. We got a support level here at 110. An ultimate target would be right down here at about 93. So if I was short this thing, which I am, obviously, I wouldn't have a full short position down here at the final profit target. I would take profit as we start hitting these support levels and carry a minimal position down to the final target. Or another way to do it is you take profit at the support levels. As it bounces, you can add back to your short. And then as it continues to roll over, take profit at the next level. As you get the bounce, add back. That's one way. Or another way is just hold. You could hold the entire position. It's just that's higher risk. I like to lock in profit to remove the potential that I'm going to have a losing trade as the trade starts to work. We'll wrap up with Barrick Gold. I'm starting to get interested in this one again. It's starting to look good. And with gold bullion being so close to putting in that potential bullish divergence, the miners are actually already starting to show bullish divergence. And I pointed it out. We've had it for a while. Here's Barrick Gold daily chart, bullish divergence right there, pretty clean and obvious. You can see we're just making a new, slightly new low, kind of in this area. And we are, let me see if I can mark that out with my shape. Right in here, right about there. That's a divergent low cluster right there. And we've got basically, you can see on the RSI, higher lows in the momentum and in the PPO as well. So right there, divergent lows, setting up for what to me looks like, you know, a potential breakout and the next leg higher. Barrick Gold's had a pretty good correction from its all-time highs, or from, not, sorry, it's not all-time highs, but it's highs. I sold my Barrick Gold back here at 28.40. I was buying Barrick Gold all the way back down. I bought all along this support line. I was buying it kind of all through here. And then obviously I added more on the breakout right here and rid it all the way up on this big dip. I added to the gold miners. I talked about that on that video, that it looked like a liquidation event, forced selling. This was in a bull market. When you get forced selling of a bull market, oftentimes that's a good opportunity to buy if you're not being forced to sell. And then when it ramped all the way up here to 28.40, and I sold, and that was the area that looked like major resistance. I was getting it all the way back here from this previous range all the way through here, many years, major resistance, and then we've really gone nowhere since. So at this point now, we've had a decent correction from the high all the way down. We're down about 28% from the high, and we're now starting to set up this bullish divergence. So it looks good to me. We might get a few more lower prices. I think it's marginal though, because gold bullion's really close to putting in that low that I think is going to be that bullish divergence. And the miners are already starting to set, some of the miners at least are already starting to set up bullish. This one especially, this one's clearly the technical posture is bullish. If you wanted to wait, there is a downtrend line right here on the daily chart that you could wait for a breakout, and that would be a buy signal. So I like it. We get that buy signal. I think we're heading straight back up to 28.30, 28.40. We'll probably get a reaction there. But I think, you know what? If we get up here, I think it's very likely we're heading off to the races for the next leg higher in what looks to me like a longer-term bull market. If you look at the weekly, Barrick's not even close to its all-time highs up here at about $55. So we could clearly, run higher. I do have a trend line down here that we could potentially, revisit at some point in time. It's just, I don't know if we're going to revisit it now. I see a bullish setup here. So looks to me like we're potentially going to run up and break. We break this 28.40. I don't have any real major resistance on this weekly chart until we hit the all-time highs. So that's what I'm seeing in this one. I'm starting to step in here and add and start to build a position. So I'm likely to, I'm probably going to load up on this one. I do like these. Okay, that's all I got, guys. Thank you. Leave me a thumbs up. Check out my course if you haven't. It's a $99 course for a good 5-6 hours worth of training. Link is in the description below, and I'll catch you guys on the next one.